Welcome to this presentation of A New Breakeven Stop. This is the Specialist Trading Weekly Stock, E-mini, and Forex lesson. Hello everyone, this is Stephen Primo, President and Founder of Specialist Trading, and in this week's webinar I'm going to give you a lesson on how to move your stop to break even. This applies to different strategies that we have. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you performance results using this new technique to moving your stop to break even. But remember that we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's lesson. All right, a number of students have emailed me asking, Steve, is there another way, another technique or method in which to incorporate so that we can move our stop to unchanged in order to protect profits so that if we have a nice gain and then things turn around, at least we won't turn what was once a winning trade into a loser. At least we'll break even or at least lock in some trades. Well, yes, there is, but before we discuss what that technique is, we want to discuss there are two types of exits at Specialist Trading. There are fixed exits, which are exits which are predefined. In other words, we know where the exit is prior to entering the trade. We know before we even get in where we're going to be getting out. Now, we have a number of fixed exits, but we have right off the bat a very standard, basic, generic exit so that you'll know right off the bat if you want to get out at that point or be a little bit more aggressive and try to squeeze some more gains out. But the strategies that apply fixed exits are strategies number 4, number 5, number 6, and number 7. When we say number 7, that's the E-mini strategy, and that's our basic aggressive version. But we also have strategies where you don't know prior to entering where you're going to be getting out. In fact, once you're in the trade, you actually do not even know where you'll be exiting because these are called dynamic exits. And what they rely on is either an indicator or some type of market environment which is going to tell you to get out. But that must happen in the future. That's why it's dynamic, because it's always changing. The conditions are changing, so we don't know where we're going to be getting out once we're in the trade. We have our stop in place, but we don't know where we'll be exiting. So what a number of students have asked is that, is there any way to have a break-even stop or some type of technique with dynamic exits? Okay, and yes, there is. Now, just before we get into that, let's share with you the dynamic exit strategies. Those are strategies number 1, 2, and 3, and as well strategy number 7, but this is the conservative way to trade the E-mini strategy number 7. So this flows into either the stock course, the E-mini course, or the Forex courses, that these different strategies have either dynamic or fixed exits. So let's talk about how we can apply this to a dynamic exit. And the way we do that is by applying our friend the standard indicator, and that's the 5-period RSI. So if you're trading a strategy that has a dynamic exit, meaning once again that you don't know where you're going to be getting out, also plot a 5-period RSI. Now these are the rules you want to be using. And it's a little bit wordy, but we'll go over this here and then I'll show you some examples. But what you want to do is you want to move your stop to break even when the 5-period RSI is either near, at, depending on if you're long or short, above or below the 30 or 70 threshold. Once again, it sounds a little confusing, but I'll show you because it all depends whether you're long or short and which threshold you're going to be using. But basically what we're stating is that if the 5-period RSI is getting near, at, above or below these certain thresholds, that's where you want to use your discretion. And this isn't a really fixed type of rule here. There's a little bit of discretion involved because as you can see, we state near, at, above, or below. So you have your own personal input as to whether it's close enough so that you want to move your stop to break even. Now let's look at some examples here. Let's look at the first example in stocks. Okay, here's an example we have here trading strategy number 3 in Netflix. Now this was a signal that was last year, but we had a long signal using strategy number 3, which incorporates our proprietary Bollinger Band setup. And right here was our signal to go long. So you would have entered at that point. All right. Now we still do not know where we're exiting. We have a stop in place. We know that where we want to exit, what it's based off of, but we don't have a fixed number. This is not a fixed strategy. This is a dynamic exit. So we have to wait for conditions to be met. This worries a lot of traders because they want to at least have some type of technique or method telling them to at least move their stop to unchanged or to break even. Well, what we can do here is incorporate then, as you see on the bottom, the 5-period RSI. This is the 5-period RSI, and this is the 70 threshold at the top here, and this is the 30. Since we're long, we're only concerned with how the 5-period RSI relates to the top threshold. All right, and as we get close, as we do right here on this particular bar, we have roughly a nice 7 to 8 point gain in our trade, and the 5-period RSI is getting near the 70 threshold. Remember, we give you the option to use some discretion here, near, at, or above the 70 threshold. So at this point, you could have taken the option to say, you know what, I'm going to move my stop to unchanged because we're very near. We're roughly about 68 or 69 on the RSI, so that's close enough for me. I'm going to move my stop to unchanged. So what you would do is move your stop basically to where you entered right here. And so you would place it, once we closed here, your stop is basically right here at unchanged. So if things turned around and Netflix started to go much lower, you wouldn't lose anything on the trade. So now you have a break-even technique. And as you can see, the trade actually turned out to be a winner. This is our exit. All the conditions were met, and everything that is included in this dynamic exit was met. And so we would have exited with a nice gain, roughly about 270. And so you could have made roughly about 12 points on this trade. But let's say you wanted to be a little more aggressive. We have a number of traders who like to trade more aggressively. They feel that there's a lot more move in the trade, and they got a nice price. They'd like to hold on to some more. Well, you could have continued to hold on to this trade and just continue to keep your stop at unchanged and use our other techniques to move your stop as the trade progressed. So this would have protected you, and had the trade gone against you, you would not have lost any money. Ultimately, it turned out to be a winner. Let's look at the E-minis now. All right, so the same thing will work on a dynamic strategy in the E-minis. In this particular example, we're looking at strategy number 1, which once again has a dynamic exit, meaning that once we enter into the trade, we really don't have any idea where we're going to be getting out. We have an idea, but the conditions have not been made yet, either by a particular indicator or some environment that we're looking for. So in this particular example, in a 15-minute chart, we went short, we entered right here, all right, but we don't know where we're exiting. And as you can see, the minute we got short, the trade started to move in our direction. But let's follow the 5-period RSI. At this point right here, on this downward move, guess what? The 5-period RSI was near, at, or below the 30 threshold. Now that we're short, we're only concerned with the bottom threshold, which is 30. So at this point, you could have said, well, I've got a good, 2.5 points locked in. I'd like to protect that in this first half hour of trading. So you could, right here where you entered, turn that into your stop and place your stop order right here. So had this turned around, it looked like it was starting to turn around, you could have said, boy, I'm glad I protected myself because it looks like this is going to turn out into a losing trade. Well, ultimately, though, you would have exited with roughly a 2.5, 3-point gain. But once again, incorporating this particular stop technique, you would have moved your stop to break even, in other words, where you entered the trade originally, once we were near, at, or below the 30 threshold. This is where the discretion comes in. It's up to you. The same technique transfers over into the Forex markets. There are a number of strategies which are dynamic, meaning we do not know where we're exiting once we're in the trade. And this was a particular signal that we had last week or so in the Australian dollar. This actually turned out to be a loser. We recorded it as a loser, but using this specific technique, you could have had a break-even trade. Now, this is a strategy number 6 trade, which is a very good, simple strategy for trading the Forex markets. And what it would have done is get us long into the Australian dollar right here, using all the rules of strategy number 6. Once again, once we enter into the trade, because it's a dynamic strategy, we know where to place our stop, but we do not know where we're exiting. We do not have an idea yet, a fixed idea. We have some type of criteria that needs to be met in order for an exit to take place. So what you could do is, once again, watch the 5-period RSI. Now at this point, you're starting to see that intraday here, you had a really nice gain here, all right? You're making roughly over 100 pips, so things are looking very nice in the Australian dollar. And even on the next day, even when we sold off, the next day it started to go back up. So remember, the rule is once you see this 5-period RSI near, at, or above the 70 threshold, since we're long, that's where you can decide to move your stop to unchanged. Now, we got very close to the 70 threshold on the close here. So at this point, one could have said, well, we're roughly about 69 or so. I'm going to move my stop to unchanged. So this is where we entered. So now this is where you want to place your stop, right here. Okay? So this day we closed high. We have a very nice profit in the Australian dollar. But look what happened the very next day. Right back down. We got stopped out. We lost basically nothing on the trade, maybe 3 to 5 pips slippage. But it was a good trade using this technique, because had we not, Look at the large loss we could have incurred with this. So this is a really nice technique. Does it work 100% of the time? No. There are many times where you may get stopped out, and because you moved your stop to break even, you broke even on the trade, but then the trade turned around and worked in your favor. But that happens with any technique. It's up to you. This is why we say experiment with this, see if it works for you, and see if this is something that you'd like to incorporate in your trading to keep it a little bit more conservative. Now, points to remember. This is a technique you apply to strategies with dynamic exits. Once again, to explain what a dynamic exit is, it's a strategy that has no predefined exit once you enter. You're waiting for certain conditions to be met. You're waiting for either an indicator or a market environment to tell you that it's okay to exit. But we do not know where that exact price is. That is so much different from a fixed exit strategy, where once you enter, or even prior to entry, you know where your exit is prior to even entering the trade. So this is totally different. With a fixed exit, it's very simple to realize where to move your stop to unchanged. We have a number of techniques in which to incorporate that. But with a dynamic exit, it's a little different. So this is a great technique to apply to a dynamic exit strategy. Now, those dynamic strategies are for stock strategies 1, 2, and 3. For the E-minis, they're 1, 2, 3, and 7. And by 7, we mean the conservative version of strategy number 7. And the Forex strategies are strategies 1, 3, and 6. Now, you can use discretion with this. It's not something that is written in stone where things have to be met, and until they're met, that's when you can move your stop to unchanged. You can use a little bit of your own judgment. Remember, it's either near, at, above, or below the thresholds. So if you get near, and it's just a personal feeling that you're near enough, it's okay to move your stop to unchanged. So use your discretion as the RSI nears the threshold. Some people like to wait for it to close above or to go above intraday. That's fine. But paper trade with this just to see how well it works for you. All right, so in conclusion to this week's webinar, this is a lesson in how to apply this new break-even stop for dynamic strategies. All right. The only way, though, this is going to work is if you understand the strategy firstly. So it will not really work well unless you know where to properly enter, where to properly place your stop, and all the different variations for entry and for stop placement. So learn the strategies like the back of your hand. Pick 1 or 2 that really you feel comfortable with, and then paper trade them. We have so many new students that keep joining day after day, week after week, and the biggest problems they have is that they don't really understand the strategies. You have to spend time learning the strategies, learn them all, and then once you really feel comfortable, just trade with 1 or 2, okay? Keep things simple in the beginning. Our edge here is consistency, and if you clutter your trading, make it too complicated, you're not going to get that consistency. Now remember, if you have any questions concerning this new break-even stop for dynamic strategies or anything on the website, anything with the other strategies involved, please do not hesitate to email me at stephenprimo@specialisttrading.com. In closing to this week's webinar, I ask that you please take one last look at our disclaimer. I showed you performance results using this new break-even stop technique, but please remember that we can in no way guarantee that any of these results will be repeated in the future. So as you're taking one last look, remember, be sure to email me if you have any questions concerning this technique, or it doesn't make sense, or anything on the website with any strategies or any other lessons that we give you on a weekly basis. If not, enjoy your weekend, and we shall see you right back here next week. Bye-bye.